Good morning. It's been a good week of rallies, and overall, I think we're going to end the week in positive territory. It'd take a pretty bad day today to really end on a bad note. And the stock market's looking pretty good this morning. The Dow futures look a little bit green. So does the S&P. The Nasdaq's down a little bit. Crude oil continues to climb. It's been climbing just about each day this week. And that's really good for oil companies. It's bad for the consumer, but it's good for oil companies. I think the economic news that came in this week was, in general, okay news. I'm not going to call it great news. I'm just going to say it was okay. And one thing that I do like about it is that it provided for stable updates. It's not like we're swinging from one indication on the economy to another. It's pretty smooth. It's what's expected is what's coming in. And that is good news for the Fed. I think they could operate with a good data set and make decisions on interest rates. So in general, stock market, the part about the stock market that I did think was a little uncomfortable is the rate of declines and the rate of appreciation. If you look at just over 6 days, going up 5.27% on the NASDAQ, that's pretty extreme. And on the other side, for the market to drop 5.77 over 7 days, again, we're dealing with extremes. That goes to show that there is conflicting sentiment. There's a good number of investors that are selling, good number that are buying, trying to take advantage. That tug of war, at some point, one side's going to win. And I'm going to vote that I think the downside's going to win. Eventually, I think we are sitting on expensive stock prices. And at some point, that tug of war, I think the bears are going to win because we haven't achieved the same high we achieved before. And most definitely not the high we achieved back in July. We're down 5%. So it'd be interesting to see if it gets above this high in let's say the next coming week, or if we're going to sell off and stock prices will go down. I'm not a pessimistic in nature kind of guy. I'm just a realistic kind of guy. And I'm looking at stock prices thinking to myself, there isn't huge catalysts that are pushing stocks up. They've already been pushed up, right? They've been pushed up quite high. What's the next push? And the AI thing's kind of playing itself out. In some ways, it's hype. In some ways, it's real. But how real? I don't know. We'll see. Time will tell. But we'll see. We'll see. There was no economic news today. I think that's of note. There's the Michigan consumer sentiment's going to come out in about an hour, so I can't talk about that just yet. And it's not a big market moving indicator. I think it's interesting to read, but it's not the big one. So no big news. As we look at the market as a whole, I didn't see any big stories. Looks like the market's going to the green, so we're probably going to end on a good note. I'm still down for the month of September. My sell-offs have been worse than my rallies in my stocks. So I'm all for stocks going up, but we'll see if I can get back into the green for my portfolio. I was in the green back in August, which was nice. All right, so there was some stocks that I wanted to look at this morning. I think one last thing is interest rates. Take a look at that. They're down again, and interest rates have really dropped. I mean, over the course of the last 30 days or so, interest rates have just really fallen. And you could see this big drop recently. And overall, I mean, look at this huge drop in interest rates. So that's good for the economy. That's good for companies. It's good for small companies that maybe have to borrow some money or have a line of credit. It's good for a lot of things in lower interest rates. And it's bad for bondholders because bondholders will have lower yields. But overall, it's been a big drop. It's been pretty interesting to see the level of ups and downs we've had in interest rates. It's been a really historic time when the Federal Reserve pushed these interest rates so high that they became really a tough thing for some companies. They came down, then they rallied up, and then they came down again with regards to interest rates. So I'm watching that. Lower interest rates means that bond values will rise. So I'm glad I've got a bond portfolio to take advantage of that. All right. Good morning, everybody. Do Me Trash. Good morning. Thanks for joining. Android PC. After bad Q4 guidance, Adobe could take the market down today. We will see. Yeah, I wanted to look at Adobe. That's the first one out of the gate. We'll take a look at. We need a good note. I still need to sell a couple of stocks for cash. Yeah, well, we'll see. We'll see. Let's take a look at Adobe and kind of dissect that. So Adobe announced their earnings, and let's take a look at the actual earnings. I was reading a few articles on it, but I like to hear it from the horse's mouth. We'll kind of go through, and I really believe in Adobe's business. I think they're the leader in kind of creative software, people that are creating videos, images, and things of that type, as well as a bunch of other aspects. They're trying to replace DocuSign. We'll see if they pull that off, but let's take a look at their earnings. All right, so I focus on revenue because there's usually some fluffy stuff in here, like, hey, they delivered cash flows above 2 billion. Okay, that's good. I'll take a look at their cash flows in their statement. Cash flows from operations were 2 billion. That's fine. But let's take a look at revenue. So this is their guidance, which the market didn't like. Sometimes company do guide to the low side. I would say that lower guidance is kind of a theme that we've been seeing with the economy. We're expecting a slowdown or recession, and companies are guiding more conservatively, and that's representative of, hey, are we going into this recession? So, all right. So for the first for the 3 months that just ended, revenues went up about 518 million, which is a pretty good growth clip. That's about, and I'm sorry, I'm reading this backwards. No, I'm reading it correct. So this is 24, and then this is 23. Let me take a little more coffee here. All right, so we did have about, I'm going to call it 10-11% growth from 4.9 billion last year for the same quarter. This year's quarter they just closed is 5.4. That's very good growth. That's good growth on a big company. Okay. Year to date, they're going from 14.3 billion in total revenue to 15.9. So that's about 1.6 billion in growth, which represents about 11% growth. That's very good. Very good for a big company. So good job on the growth, Adobe. So it looks like their profitability is good. Earnings per share looks good. All right, cash went up slightly. When you include short-term investments, it actually went down a little bit. And debt went up a little bit. So, and debt went up, I would say substantially, because you have debt in the current liabilities as well as in long-term liabilities. When you add them both, you got 1.5 plus 4.1. So you've got 5.6 billion versus 3.6 billion. So $2 billion of additional debt. So I'll put that into my valuation. And let me make note of that. And cash went from 7.8 to 7.5. So they still have more cash than debt, which makes their balance sheet very strong. So good, strong company. I really like their business. I like software companies. So their 3 months of cash flow, they did do better on the operating cash flow, and they don't have to put a ton of money into their business. So the cash flow was better than expected. It was almost $2 billion in the quarter. So if you annualize that, it's $8 billion. That's very good. So nicely done on cash flow. So what's the story on the guidance that the market's freaking out about? And let's kind of examine it together on that. So let's get back to their guidance line. So this is their fourth quarter targets, right? So revenue they're expecting is going to be between 5.5 and 5.55 for the fourth quarter. So, all right, so we'll take a look at that. And I don't think the other things are consequential. So I'm going to move this guy over here on another screen and take a look at their historic information, right? So when we look at their income, I'm going to go quarterly so I can look at a couple of things. So here's their growth, right? 10.59, very good. So that quarter that they're doing guidance for, it's going to compare against the fourth quarter 23, which is at 5 billion, 48 million, and they're going to be at 5.5. So that's going to be about, call it 9% growth. It is a little bit lighter than their current trend, which is 11. Maybe they're being conservative, but it's not the end of the world. It's not like, oh my God, we're not going to grow. So the market may be overreacting a bit because it's just a very small miss, I guess, on guidance. They can come in and overachieve that. So that's interesting. Let's take a look at the fundamentals, and then I'll go into my valuation for Adobe and update that and see what I think the stock is worth. Now it's trading down by 8%. It's been interesting over the past month. We've seen some stocks where in the pre-market, they're way down and then they rally up, and vice versa. So I wonder where this one's going to close at the end of the trading day. We're going to open in about 17 minutes, but we'll see where this thing ends. Let me take a closer look at their fundamentals. So this is a pretty substantial cap company. 260 billion is pretty substantial. They're a good size software company at roughly $21 billion in revenue. Their current PE ratio is pretty high, 49. Forward PE is 29. 49 versus 29. They're buy, but they're priced fairly according to analysts. I tend to agree, but I think there's a little bit better discounting than they're leading on. I'll show you my valuation, and we'll go from there. And then on the financials, we just saw the financials. So let's look at the forecast real quick. So a lot of analysts cover Adobe. This is a high quality company. They have a very high quality balance sheet. They're very well known, very well covered. They don't have a direct competitor. Adobe does not have like a direct competitor. Let's say Ford has GM, or Coke and Pepsi. They're just rivals. They compete against each other. And Adobe kind of operates for the most part as the leader, the brand that most people trust for the things that they do. Now there's some overlaps, like they're trying to compete against DocuSign for digital signature capture. And they do have some places where they might compete with like Google or Microsoft, but the core of their business is that creative kind of place, that creative arts, creative occupations, marketing, that kind of thing. And let's face it, the digital world is growing, and Adobe's growing at 11%. That's really good. So mostly, I think it's a very desirable company, very desirable, and I would really like to keep it in my portfolio. It's a stock in my portfolio. I've been in and out of Adobe and successfully made money on Adobe because the market, although I think it's a really high quality company, the market will sell it off and it'll just be too good for me to resist. I'll buy it. The market rallies up. It gets way beyond its intrinsic value. And for some reason, I think I need the cash or something. I sell it off and I make money. So there's nothing wrong with that. And I've done it a couple of times with Adobe because it's a high quality stock and I like it. And that's where I'm at with Adobe from an investment. So earnings per share is $18.54. All right, so I'll use that guy in my valuation. So $18.54, and it's going to grow nicely, 13 and 15% growing in 25 and 26. All right, so let's take a look at Adobe. Here's my valuation. I have, free cash flow run rate was at 7.5 billion, and I'll go ahead and leave it there. It's nice conservative run rate, growing at 10%. I'm good with that. They're growing in revenue at 11%. Long-term growth at 5%. I'm good with that because they're in the digital creative process. So I'm good with that. Let me make this a little bigger. I think it's a little small. All right, it's a little better. Hopefully you guys can see that better. So just to recap, my cash flow forecast, this is the cash that I expect Adobe is going to produce. My run rate that I had before, and I'm going to leave it because it might be a little conservative at this point. The company's guiding that their fourth quarter isn't going to be as great as the market would like. So I'll leave it at 7.5 billion is going to be their run rate for year one, and then grow in year 2, 3, 4 by 10%. And then terminal value will grow by 5%. All cash flows beyond year 4 will grow at 5%. It has a high quality balance sheet, so I'm going to discount all their cash flows by 8% to get to an intrinsic value, a net present value of all those cash flows of $268 billion. The cash on the balance sheet is actually $7.5 billion, and then total debt it went up. So we're looking at equity value of 269 billion. Now, what is their current? Let me look up their current stock price on another spreadsheet and put that in there. Actually, their current market cap. So current market cap is 260. And you can see that the stock, began to rally. It was at 239. I was buying shares, and now it's rallied up a bit. So that is a good thing. So shares outstanding, it actually went down. Okay, so the value per share is $608 per share. And this updates automatically, but it's going to be 8% down or so. So based on yesterday's closing stock price, it's 4% discount. So it's fairly priced based on free cash flows. And that's a conservative cash flow forecast, but so be it. And then the earnings per share that analysts are using is $11.82. So I'm sorry. So it's $18.54. So $18.54. So I'm giving them a P of 32 because it's a software company. It's a desirable industry for me. They're growing. It's a very well operated company. So I'm going 32. I'm growing their earnings per share by 12%, which is expected. Since they guided down, I'm going to go to 10% on that. So that gives us, if you look at earnings per share, I would calculate an 11% discount. So collectively, there's about an 6% discount. And again, this is using yesterday's closing price. So I would actually say that the stock is fairly priced. It's right where it should be. It could probably go down a bit. It could probably go up a bit. We'll see where it goes. But right now I'm sitting on a 12% gain on Adobe, and I've only owned it for like 2 months, maybe 3. So I'll take that gain. I think after today, it'll be down to about 4. We'll see how far down it goes. So that's Adobe for you. I wonder where it's going to go, how it's going to behave today. And let's see where the market has the stock right now. So it's still at down 8%. Market will open in about 10 minutes. All right, so that's Adobe. Right now, I'm just going to hold on Adobe. No need to buy any more shares for now. I think it's fairly priced, and I'd like a discount on my shares, because, I have choices to buy software companies all over the place. And this one here is a good holding. I've got about $22,000 of Adobe, but I've got other software companies in there. And I always consider Google a software company. They have a lot of software products, and I own a lot of Google. So that is Adobe. All right, so let me catch up on, I think there's been some new comments. Mike, good morning, the dividend investor guy. So you want to look at ARCC, and you want to look at Snow. I wonder where Snow is. They've been having some trouble, so we'll see where they're at. Trader Pratt, good morning, man. Hopefully you're having a very nice Friday. It is nice that it's Friday, heading into a weekend. Here in Southern California, it'd been really hot for like 2 weeks, like really hot, above 100 degrees Fahrenheit. And we finally started to cool off. Oh, man, it feels good to get some cooler weather. And the plants really like it outside. Our garden was like just really feeling the heat. So it's nice that we're going into fall. It's nice that it's Friday. So let's see here. Android PC. I don't know. Maybe people are easily scared by Q4. Yeah, I think the stock had been going up. When you look at Adobe, the stock was going to the upside. So you see this rally here. So it's not like, the stock was like not doing anything. It was going up. So for the stock to kind of take a breather, all right, that's cool. But it was a really good opportunity, just back here, back in June. And I took advantage of it and took advantage of the sell-offs to make a little money and kind of follow the recipe of, hey, this is a quality company. If the market wants to discount it, I'll take the discount. Thank you very much. So, the market may be taking a breather. Again, I come back to the fact that I think stocks, especially in some industries, they are expensive. It's not like we're dealing with a very cheap stock market. Prices are high. And then ABB, good morning from Thailand. Awesome. Good morning. Thanks for tuning in. I think you're the first one from Thailand that's put a comment in the chat. Very nice for you to join. Shadow Guy. And this is the new Google Sheet. And I migrated from Excel to Google Sheets, and I was feeling pretty good about it yesterday. I turned on my PC, and Google Sheets reformatted it. It still thinks it's an Excel spreadsheet. So rather, it's 6:25 in the morning for me. So I'm going to have to fix the formatting because it doesn't look as nice as it was looking yesterday, and make sure that uh, Google Sheets believes it's a Google Sheet because that's what I created. But that is the new Google Sheet, but it's not perfect yet. I'll get it there by the end of the weekend. And I'm very happy with migrating to Google Sheets. I think it's going to be a good thing for me. My Excel model was getting too big and it was really clunky to use in Excel. I think Google Sheets performs better. We'll see. So Mike, dividend investor guy, Adobe stock is very volatile. I've got an order at $502. Okay. Yeah. I mean, it was, where was it? It was at 450 3 months ago. So yeah, it can get there. It might take a couple months, but I think, having that type of mindset that, hey, if it goes down enough, I'm a buyer of this quality company. And, we're kind of agreeing on that type of recipe for making money on stocks. Okay, so caught up on comments. Got a nice list of stocks to take a look at. We looked at Adobe, and let's look at ARCC. I'm not quite sure what that company is. Eris Capital. So these guys buy businesses that they feel are undervalued. They need to be recapitalized, kind of, repaired and then put back into the public markets or sold to another private investor. I am familiar with them. It's been a long time since I've touched or looked at them. I believe they're headquartered here in Los Angeles. Yep, Los Angeles, and market cap is 13 billion. Revenue is 2.8 billion, and they have a big dividend. So this is a lot like, BlackRock or one of these private equity companies that you're not necessarily buying like a company that makes a product or a service, provides a service. This is a holding company. They own other companies. So the profit and loss you're seeing by the operation of those companies, or if they sell that company, you would see a gain or a loss when they sell their investment in a company. Over the last 5 years, up 9%, which is not a very good rate of return. They have that dividend. And I'm sure some dividend investors are like, hey, that looks pretty good to me. What's been their dividend payout history? So their payout ratio is 67%, which makes sense because it's not like they have to keep a bunch of capital around to repair a factory or something like that, because they don't have factories. They could just pay it out to investors. So their cash dividends have been going up over time. Looks pretty good. The dividend payout's been good. You're not going to see appreciation, it seems, but you're going to get that big dividend. And the good news is they haven't had their stock depreciate either. So income investors might be really interested in a company like this, that, hey, they provide a really good income stream, and that's what you want. So that's not the right investment for me. I'm in a tax bracket where this becomes, it's good to get dividends. I like dividends. I like having, dividends because they're in my income portfolio. And, at some point, I'm really going to depend on that income portfolio to pay all my expenses. I don't need it today, but at some point. And for me, I'm already at the highest tax bracket, and getting more income through dividends is good, but it's also taxable. I'd rather see my stocks appreciate, because that's appreciation isn't taxed. It just keeps going up, and it's somewhat like just having that equity in a stock. So that's where I'm at. That's the lane I'm in. But this one here, it looks pretty good. They probably use a lot of debt to do their financing. So I wouldn't be all that freaked out about debt. when it comes with a company like this, because they're having to borrow money to buy a company, acquire a company. I would just want to make sure that, you don't see anything out of place when you look at the company, like, hey, their debt, this debt was probably issued out to buy a company or maybe invest in a company, help a company get better, and then see that the owned company either get more value or be more profitable. Cash flow wise, I'm sure they cash flow because they don't have, well, I take that back. Operating cash flow has been up and down. So that's interesting. Yeah, that's a little bit of a surprise, is why do you have negative cash flow? That would be a homework item for anybody that's interested in this stock. Yeah, that is a surprise. Why do they have negative cash flow? If their businesses are operating out there and they're good businesses to hold, they should be generating positive cash. And then these guys, they don't really do, other than managing and advising these companies they own, they're not doing anything else. They're not like, oh, we got to hire a bunch of engineers to design the next version of this product. No, they're not doing that. They're not hiring big staffs. So homework item is take a look at the cash flow, make sure you understand it, make sure their debt is good. But the payout of dividends has been consistent. To the dividend investor, this would be higher, risk than if you bought, a treasury bond that will pay you, I would guess, around 4% right now. But an interesting investment idea. Thanks for bringing it up. All right, let's look at Snow. So this is Snowflake. And Snowflake, I think, has had kind of a rough year. So Snowflake, I have quite a bit of experience in the software industry and understand what Snowflake is doing. And they're in the world of, software and data and the digital world. As you can imagine, companies are just accumulating massive amounts of data, like massive amounts, and so much that they're like, how do we put that data to use, right? So Snowflake came into the market and said, hey, we're going to help you manage that data better. We're going to help you access the data better. And the market really responded favorably and said, man, you guys are awesome, up 65%. Now, Snowflake has huge competitors, Microsoft, Google. I mean, these are huge, massive companies that don't quite do it the way Snowflake does it, but they do it. They kind of do it a different way. Maybe not as quick and agile as Snowflake, but they do it. Second thing, and I'm using my memory, so let's try to look for some stories, but they're down 51%. So you can see that the market's selling these guys off. Where I'm trying to go is my investing in stocks is both quantitative, and when we get on this live stream, we usually go over the quantitative stuff, right? Fundamentals, the value of the stock based on intrinsic value of cash flows and earnings per share. That's all quantitative. But the qualitative side is really important to me, which is, do I think Snowflake has a bright future? Do I think they're operating really well in their industry? This happens to be an industry that I have a lot of professional experience in. So I could go deeper into this industry, and I'd like to take you through that. So Snowflake, stock selling off. I've heard some stories on the street, and I wanted to make sure I see some press covering it before I say that. So I'm looking at the stories. Yep. So this is the story that it would freak me out as both a Snowflake customer and a Snowflake stockholder. Is their software is prone to cyber attack. is prone to hacks. Now, it's been a couple stories. A big one was AT&T. Why did I hear about that? I'm an AT&T customer, so I was notified. Hey, sorry, your information was probably taken in the hack we had. Thanks to our friends at Snowflake. And it's a list of companies that is being added to a list of companies that have been hacked. So Snowflake's a new player to the market. Do they have fully, hardened security? It seems like maybe not. And I hate saying bad things about people, so I'm going to be very careful. But that is a story that I was hearing out there. Let's try to find another story. So here it is. Here's another cyber attack. And this one's on Seeking Alpha. I think I have access to Seeking Alpha. So give me a second. We'll read this guy. So again, qualitative assessment of Snowflake. So this is Snowflake Q2, assessing impact of cyber attack. This is a credible source, Seeking Alpha. And who was hacked here? As reported by the media in June, at least 100 Snowflake customers were confirmed to have been impacted by cyber attack. About 165 businesses partially affected. Oof. It's a lot of businesses. And I know AT&T was on the list. That's massive. So that's back to my qualitative assessment of Snowflake, right? And this is Adobe. We'll put that off to the side. So Snowflake had a good idea. And I would say, okay, you're kind of going to compete against the big players. So you're desirable because you're a software company. You have a unique proposition. But if you cannot execute, customers are going to neutralize or ignore maybe some of the innovations you have because of the fear, and they should be in fear of cyber attacks. The whole CrowdStrike debacle, that was not good. This one here is just adding fuel to the fire of concerns around cyber attacks. So Snowflake, am I an investor in Snowflake? No. Would I touch the stock? No. I don't know. It's from what I know of Snowflake, their solution is not like clearly like so ahead of the competition. It's not even funny. That's not the case. I think they do some things that are unique. They do some things that are maybe a step forward. I would even say in some places a leap forward. That's fine. But if it comes at exposing yourself to cyber attacks, that's how CTOs, CIOs, that's how executives get fired, is if you get hacked. So I think Snowflake's probably has a lot of tension with customers right now where it's like, oh my God, am I going to be the next one that gets hacked? So that's the big story on Snowflake. So I can't get out of the qualitative zone of Snowflake and go into the quantitative zone. I can't get out of there because I'm like, hey, I don't want to touch this thing. It's got too much radiation. Why would I? Every number I look at is just going to be like, I don't care. I don't care if they're doing free cash flow. I don't care if they're growing their business. But I'd be curious to see if they're growing their business. Our customers like, I don't care about cybersecurity. See, they're a small business. They continue to grow. But I guess the play here would be following the story of their security, seeing that they repaired their security and that they're re-establishing the confidence in the marketplace around their software. That would be the order of business because, again, they're not that big. They're kind of small. And what was their market cap? 38 billion. Okay. But their rivals are big. Their rivals are massive. So actually they're 3.2 billion in revenue. So that's a pretty good clip. I think the competitors are going to go after them, especially the big ones. So I would not want to buy Snow right now. It's just there's just too much going on that could really become a big theme, and I don't know that investors are going to be overly confident in the stock. I think some customers may leave. Customers like AT&T, they're like, "Whoa, what the hell happened?" So that's my opinion on Snowflake, and be curious to see how you think about it. But that's what I'm seeing. All right, so looks like Mike's got some comments which I want to read. So BDC. So ARC has been solid for me. If you're a patient, you can buy the dips, make good income. I agree. Mike, my goal is one day to live off my dividends and play with my growth stocks section. Right there with you. My goal is to have my dividend portfolio as well as my bonds produce enough income or that pays for all my living expenses. And my real estate and growth stocks are just icing on the cake. So good stuff. Shadow Guy. Glad you made the change. I folded up MS Office. Cool. Yeah. I'm trying to get completely free of it, but it looks like it drew me back on a startup this morning, so I have to figure out how to make it permanent. But I really like Sheets, and glad that I make the move. Mike, the dividend investor guy, you asked to keep you updated on MPW. It's up 6% today, quickly approaching $6. Awesome. Very happy with MPW for MPW stockholders. Sebastian. Yeah, so we have this live stream. I host it each day. It's 9 a.m. Eastern, 6 a.m. Pacific. I think it's a good time because I'm kind of getting my bearing straight. I usually don't trade a whole lot in the first hour of trading. There's just a lot going on. I'm not quite sure what the market's going to do on that day, but it's a good time to kind of organize my thoughts. And that's the time that I host this live stream, hopefully to, have a good conversation and help everybody kind of, get your bearing straight and maybe have a good, successful trading day. I have received multiple good tips on stocks. So as people suggest stocks, we look at them, I'm like, hey, that looks pretty damn good. I think one that came up that I'm going to look at again is NXT. And there's usually one or two a week where it's like, that looks pretty interesting. And I analyze it for a few days, and then decide if it's going to be on the watch list or even better. So you're from Sweden. Very cool. It's 6 p.m. in Sweden. Well, it's not too bad. Hopefully, oh, you did. You said this yesterday. Cool. So, yeah, I have a live stream. I'm going to try to have one each trading day at this time. It's 9 a.m. Eastern. Probably go for about an hour, maybe an hour and a half. And on occasion, I'll do a live stream after the market closes, especially on days where it's like really crazy. Like if it sells off for the NASDAQ sells off by 2 or 3%. It's good to have a live stream and kind of talk it through because it's a lot of things were of interest probably happened on that day. All right, so we went through Snow. Let's handle BDC. So this is Belden Incorporated. And Belden designs, manufactures, markets a portfolio of signal transmission solutions for mission-critical applications in Americas, Europe, the Middle East, Africa, Asia. It operates two segments: enterprise solutions, industrial automation solutions. Okay. So this is communication equipment. So did they do hardware? Yes, they do cables, connectors, cord sets, panels. Okay. So they do a lot of the like physical products that connect data centers, connect companies, and so forth. Um, Not a very high margin business. It's as you can imagine, there's a lot of competition. If I'm understanding their products right, so you got racks, cabinets, panels. Yeah. So to me, it's a physical product, right? We're dealing with physical products. These are probably being manufactured in China and other places. Not the highest margin business, I imagine there is. So when we look at look at their revenues coming down. Yeah, they've been losing revenue. They're they're about a $2.3 billion company. They grew in 22, grew in 23, and then they're down. So these guys are feeding like the data centers, that are feeding corporations who are expanding, maybe hiring employees and they need more equipment, bigger data centers, that kind of thing. So back to their gross profit on 2.3 billion in sales. Their gross profit was about 900 million, and that's going to be about 35%. So as expected, it's not a Meta that is 85% margin business. Okay, so these guys are a small company. Their stock has been going up. So what catalyst is moving the stock up? The revenue is going down. Okay, back to qualitative. Okay, these guys are doing physical products. They're doing things like, wires, connectors. This is just like very easy to replicate products. There's very little intellectual property, no patents to keep competitors out. It's not a highly desirable business for me. So what's pushing the stock price up? It's like, that's interesting that investors are like excited about this product. It's a revenue 2.3 billion. I just showed that revenues are coming down. PE is 21. It's a strong buy. And I could tell you, I'm going to guess at why their stock's really exciting investors. And it's the build out of hyperscalers in the data center. Here it is. So again, I think these guys provide a needed solution, but they don't participate in the biggest profit area of the industry. They actually sell a less profitable part of a data center. So they're not that desirable to me. And if the data centers are being built out and everybody's excited about AI, oh, the data centers are going to be massive, cool. Then can somebody explain to me why revenue is dropping for this company? Why? That's one of the things that, as I look at data center related companies, and I continue to see this, I'm like, maybe everybody built it out when everybody's excited early in the AI hype cycle, and that did happen. And then we're beginning to see revenues fade because it's like, hey, we got the data center built the way we need it based on the workloads we're going to put in there. We're good. So I think it's really setting up for this stock to really go down. When we look at the value of this stock, let's see if they produce free cash flow. They do, and it looks good. They have consistent cash flows, and they've gone up. Very good. 220 for their industry. I'd maybe go 15. That would be a value of 3 billion to 3.5 billion if they don't have too much cash. So they're overpriced by a little bit, maybe overpriced by like 25%. Let's look at their balance sheet to make sure they don't have too much debt. They have $564 million of cash, and they have 1.3 billion of debt. Not too bad. So yeah, I think they could afford to pay off that debt if they needed to. So it's a declining revenue business priced at 20 times their free cash flow rate. It's a pass for me. There's just, if even if AI is everything that everybody's saying it's going to be, and immediately like, oh yeah, we're going to start seeing all these use cases that are super exciting. They sell stuff that other competitors can sell. It's not like they own the GPU technology that NVIDIA owns. Only one NVIDIA can sell that GPU technology. So they have a barrier of entry. They can keep competitors out. These guys are selling stuff that Cisco can sell. 20 companies can sell. So they're going to compete on price, and they're going to keep each other from having really fantastic margins. So not the kind of company I would want to buy. And I think it's a little expensive. It's really been pumped up, and it had a really bad correction back here, but then it's back up, which is interesting. So the whole qualitative part of my assessment of a company, it's kind of hard to kind of put it in a formula like, oh, I look at this and that. Each industry is a little different. Like when you talk about technology, you need to talk about the innovation of that company. Do they have the best product? Do they have patents? You really get into, I get that their products are really good today, but are their products going to be great tomorrow and next year and in 5 years? Is the culture of that company the type that is just going to continue to innovate and outperform everybody else? If you're talking about a different industry, maybe a different qualitative assessment you want to make on that company. And that comes with experience. It comes with, knowing industries. There's a different qualitative criteria based on industry. Oil companies, right? Different versus technology versus, let's say a professional services company or logistics company. So keep that in mind. They had a pretty good correction. I mean, in the course of what looks to be about a month and a half, it dropped 33%. Oof, that was painful. But then investors said, hey, man, I want to own that company. And it's up 57% over the course of 10 months. So very good return for investors over 10 months. So that's my story on Belden. All right. So Sebastian's asking about Palantir. Mike, Palantir thinks is overpriced. Yeah, so Palantir is another one of these software companies, and I think it's PLTR. Yeah. Palantir is coming into the market with a unique proposition, and it does have value to businesses, especially like for government. And let me get reacquainted with what Palantir does. So it's within the big data space. They're helping organizations, especially like governments, identify patterns that could be actionable patterns. Like, hey, I see this pattern. It could be a terrorist attack. I see this pattern. It could be this. I see this pattern agriculturally. I think you got to tell farmers that there's going to be a drought, that kind of thing. And it's a really interesting proposition to the marketplace. You could say in a way that they're an AI company. I think they do have a unique proposition. Are they being, priced appropriately is the question. And how much competition are they going to have from Google, Microsoft, these big, massive, intelligent organizations? Because Palantir is operating in their space. These Microsoft would like to do these workloads. They would like to do these, use cases instead of Palantir. But Palantir came to the market with a unique proposition, and it's been a success so far. Their growth is good. I just showed that our friends at Adobe, which have about twice as big of a business, and these guys are new. Palantir's relatively new. So for them to get to, actually, they're a tenth the size of Adobe. Sorry. They've gotten to 2.4 billion in revenue, trailing 12 months. They're new. They're growing at 21%. Where I was going to go was 21% is good, but it's not great. They're kind of small. I just showed Adobe. Adobe has a revenue run rate of 20 billion, and they're growing at 11%. So why are you only growing at 21%? You're quite a bit smaller than 20 billion. You're probably 80% of that. So, but it's a good company. Let's take a look at cash flow. They're cash flowing at, call it 700 million. I'd probably price this company at around, 30 times their free cash flow rate. And that would be 3 times 700 would be 21 billion. And that'd be a comfortable valuation because their growth rate is not like super high. It's just okay. And I come up with 21 billion and investors say, no, it's worth 79 billion. So I don't understand investors that are in Palantir. They don't understand me probably, and that's okay. I'll keep my capital where it's at and let them invest in this. Now, the market did agree with me way back when. And the market, I think Palantir could be put in a category of AI, most definitely. And AI is receiving a lot of attention, right? So I think some of the AI hype is leading to the stock price that, hey, these guys are probably going to have some type of AI play that is transformational and is going to make them super valuable. And it could happen. I just cannot. Palantir has competitors. It's not like, oh, they're the only ones on earth, like back to NVIDIA GPUs. Those are the only GPUs that are the fastest accelerated computing GPUs in the market. So Palantir for me is a pass. I can never get the solution or the price anywhere near its intrinsic value. I think I do have Palantir in my valuation. So let's take a look. So based on a stock price of $30, and I don't think that's correct. One second, just looking up the current stock price is $35.48. And something's going on with my model that 35.48. All right, so I'll have to fix my model, but basically, I have Palantir priced much lower than their current stock price. It was about 45% premium, and it's just it's an exciting company, but it's not the kind of company where they kind of own the whole market. No, that's not the case. I think they do have a unique proposition. They do have some pretty good contracts, but their competitors are pretty formidable. Their competitors are like the most valuable companies on earth. So good luck with that. Good luck taking on Microsoft. And that's where I think about Palantir. Palantir will continue to be kind of a momentum stock. Like some investors will be super excited about it. Stock will go up and then it'll sell off. But over time, stocks will have to support their stock prices with fundamentals. And I don't know that the fundamentals will ever catch up on the stock price for Palantir. All right, so I'm going to go another 10 minutes or so. And I see a lot of chat, so that's great. Thank you so much. But I'm going to need to get going this morning. So Sebastian, I think they will make AI actually usable for companies, fulfilling the promise of big data. So one thing I would point out is what Palantir is doing, the industry's been doing for 10 years. We're just calling it AI now. So the big data, right? Looking at these patterns, we've been doing this for a long time. And just to compute, and I would say our technology wasn't as good as it is today, and now we can do it better. So it's not a new concept. Palantir is doing it better. Great. But it's not like, oh, this is a brand new transformation in AI. No, it's big data. You're looking for patterns. Yes, that's what we do when we look at big data. So keep that in mind that, a lot of things are being branded AI. Like, oh man, AI this, AI that. And 10 years ago, they were branded something else. They were called something else, but they're the same thing. And it's just, companies, you can't blame them. They want to call it AI because then it makes them more exciting, makes the product more sellable, makes the solution more sellable. So keep that in mind. So Jose Pinto, good morning. I was thinking of tenor and oil business. We've been looking at oil companies this week, and with oil prices down, the oil companies are discounted. Now it all depends on oil prices, but like Chevron's up 0.88%, but the stock's down because oil prices are down. Oil prices were really low. They were down to like low 60s. I don't think they're going to stay in the low 60s. I think they're probably going to go up to mid 70s or so. That's my, general kind of observation or forecast. They can go up even higher if you have any type of supply issues or you have any kind of geopolitical tension. So oil is not a bad place to kind of look at right now because I think it's discounted. You can buy low and buy really good acquisition prices. You have a lot of choices. You got big major oil companies like Chevron and Exxon. You have some mid players, Occidental, Marathon. You have some small players. So there's good choices in energy, and hopefully you find a good one for you. So Sebastian. Yeah, so large language models are a big thing right now. I get it. But again, so a large language model build is very expensive. The source of a large language model is data. So whatever your data repository is, whether it's, hey, we're storing our data in this big database and it uses Palantir to mine that data, because Palantir is not the database. Palantir is a solution that sits on top of the database. All that data is pretty much the ingredient to a large language model. Then you train your large language model to understand the data, to set up a vector database so that when the AI application or the use case is being asked questions, think of ChatGPT or Gemini. As you ask them questions, that's going through a vector database and saying, hey, Victor's asking about, new cars and if they do this, so it kind of guides you to the right area of that large language model. So I get that they're going to be a part of it, but they're not any different than, hey, my data is being stored with somebody else and somebody else is mining the data. It's just an ingredient. It's almost like saying soil. I'm getting soil from California to, put into a particular, planting of crops. Oh, well, if you get the soil from Georgia, it's probably going to be the same. Yeah, it's just going to be a material that you put into your large language model. So it's dive deep into it. It's an industry that I've been in for a while, so I know a little bit more than the average investor in this area. And I'm not an expert at it. I just know enough where I could assess, okay, what's true innovation, what's not. ChatGPT is true innovation. That's where somebody pulled off the very first real life use case of a consumer, somebody on the internet, going to a chat window and asking questions, and ChatGPT successfully answering those questions. Now, the questions are pretty simple. It's not like it's giving you awesome responses and very detailed responses yet. Maybe someday it will. The responses are very good, but they're very kind of topical. Gemini, similar. Gemini is getting better. And then Meta AI looks really good. Again, really good responses. So I think it could definitely enhance, improve, change the way we do search. And Google's already using it in their search. If you do Google searches, you're going to end up in Gemini. So again, Palantir, how do they play in that ecosystem? They're a software mining company. They're doing big data analysis. They're trying to find patterns and analyze the data. But let's not confuse them with they're a large language model builder. No, they're not. They're a database company. They're not that either. They're somewhere in between. Are they a necessity to build a large language model and then create an AI app? No. Can they help? Yeah, they can. So yeah, so Palantir got into the S&P 500. And FYI, stocks are things that retail investors and institutional investors buy. And in a lot of ways, they will buy things that they want to own. Palantir is a stock that people want to own, most definitely. So investing, for me to successfully invest, I've created a recipe for myself, and I encourage everybody else to create a recipe that you can use and replicate and do over again and make money. My recipe is to deal with the intrinsic values, look at fundamentals, look for companies, preferably that are really good buying opportunities, and then watch them rise. Buy really good quality companies that are priced well, and then watch those investments rise. My goal is to double a stock value in the next 5 years. All those things, that's my recipe. Palantir doesn't fit my recipe, and that's okay. It's probably a good stock for other investors, but not for me. It's not in my zone. So I don't want to discourage you from buying Palantir, but I think it's productive if we share our own, views of a stock. In my case here, you kind of understand how I approach a stock, what I look at, where my buy zone is, what I'm looking to do with a stock. So if you're a successful Palantir stockholder, congratulations. I hope it keeps going up. It's just not the right stock for me. So Mike, the dividend investor guy. And yes, as of 23rd, they will. Uber jumps on partnership with Waymo. Do me trash. What's up, man? Oh, I love Uber. And, I haven't taken it. It's up 5%. Great. I haven't taken a Waymo ride, and I really want to take a Waymo ride. They operate in West LA right now, and that's the closest I am. And I'd literally have to go there for a joyride. I'd have to get myself over there and then drive around just for fun. Hopefully they'll have the service in my area soon, and I could, take it to the airport or something. That'd be pretty cool. But hey, good news. I think Uber, I don't know that Uber is going to be a developer of technology that is the next generation for ride sharing. I think for sure that robotaxi is going to be a paradigm. It's going to be a new paradigm in that space. And I think Uber is going to partner. They've already partnered with GM. Now they're partnering with Waymo, huh? That's good news. Because I think Uber's, there it is. Yeah, cool. So Uber's value is in the experience for the actual consumer globally, especially in the US, and really owning that community, that network, kind of like Meta, right? They own the network, the community of social app users. Uber owns the community of ride-hailing consumers. And I think that's where they need to continue to play, and let Google figure out Waymo, let Tesla figure out their robotaxi. But you could see that Waymo is really taking off. So I'm both an Uber and a Google stockholder, Google Alphabet. So good news. Thanks for bringing that up. Yeah. So, Sebastian, I think you're really bought in on AI. That's awesome. Yeah. Keep at it, man. I think if you can get some insight there that makes you a successful investor, more power to you. I'm always going to pump the brakes because I've been here before. And I think, again, sharing our own opinions and so forth helps us kind of calibrate, is everybody bought into this, or is some people not bought into it? I think AI is really interesting. I think it's going to be something in the future. I don't think it's going to be as big as people are making it out to be, and it's not going to happen as fast. And investing is about, what's going on, like Uber, what's going on with the stock? Where's it going to go in the next 12 months? Where's it going to go in the next 24 months? So if you have companies like we were looking at Palantir growing at 21%, that's not very high growth. High growth is 80, 100%. Uber is an example. Let's take a look at Uber. Uber is pretty big now. They're a $40 billion revenue company. They're growing at 14%. So this is, Palantir was at 2.4 billion. So that's roughly about 16 to 17 times larger than Palantir. And they're growing close to the same rate as Palantir. So that's why I thought, well, they're not transformational. These guys are already big and they keep growing. And now they got this robotaxi partnership. So it's going to make them more profitable because they'll probably be able to keep more of that margin. So go Uber. Good news. Neil, good to see you, man. See if AI can get my house back. I'm not sure what that means, buddy. But all right, so good session, everybody. Let's take a look at the market before I sign off. See what the heck's going on. So it looks like the Dow is up 0.58, the Nasdaq's up 0.38. Russell making it happen. Small stocks are leading the day. Nice. One more thing I want to look at is, let's take a look at sectors. See which sectors are moving. And man, everything's in the green. Wow, very nice Friday morning. All right. Materials. We've been talking about materials companies, right, over the last month, and saying that, as everybody's afraid of this economy is going to go into recession, material companies are being sold off, and it might be a good time to look at them because you want to buy when it's low, like Ternium. Yeah, baby. Tomas. Let's look at Ternium real quick after I get done with this little thread because I own Ternium. So, you want to buy like ahead of everybody else. Understand a market well. Don't pick, I'm going to buy every sector known to mankind. Pick your lanes. Like, hey, I'm really good at this. My life experiences got me to be really good at that. Like maybe I'm going to go outside of my experiences and say, maybe you were a biology major in college. You worked in a laboratory designing or developing something, creating something in the life sciences industry. That's your lane. You know it better than most people, especially investors that are looking at metrics that really don't have a lot of depth in those metrics. They can't do the qualitative assessment very well like you can if you pick the zones that you're good at. So it's good to see that materials are working, real estate's working, communication services are working, healthcare is at the bottom, technology's doing okay for today. So let's look at Ternium. It's up 2.56, but it has been in a pullback. You can see this pullback. It is a good dividend payer. Again, I don't invest on dividends. I invest in good, solid businesses. I agree with analysts that this is a really discounted company. They operate really efficiently. And if you get this commodity steel to go up in price, these guys, their stock price will really flourish. You can see that it's really flourished. As material prices go up, this is when supply chain issues were happening. This stock was rocking. Now it's settled down. It's a good company. I like their strategic position, being down in Mexico, south of the U.S. All those things kind of line up well for me. I like my Ternium investment. So, yeah, let's hope that it keeps going up. Let's see how material companies do over the next couple months. All right, everybody. I think it's a good point to call it an end. So, everybody, thanks for tuning in. I'll be back on Monday, same time, 9 a.m. Eastern. Talk about the market. Hopefully we keep these gains that are happening on the stock market and end a really nice week. We've been up nicely this week. So it'll be nice to ride into the sunset for the weekend and be sitting on a nice gain. Hopefully all of you guys made good money this week. Everybody, thanks for tuning in. Have a nice weekend.